Welcome, I'm Catherine Magaña here with Steve Wolff, then Stefano, and Rachel Ivanovich, where we're here to provide you insights about the markets and planning and much more. So here we are, we're still hearing about the Fed, inflation, and we're seeing the markets move a little bit. But more importantly, today marks the 24 years since 9/11 of 2001. And so today, as we reflect on what happened, what I realize is what we learned from that time is that we care about our country. And I know at that time we also came together as one. And it's interesting, as we were preparing to sign on here, Vince, you were sharing that you knew a lot of people that were there.
I did. I worked for Fred Alger Management. I ran their West Coast operation for about 5.5, 6 years, and worked very closely with all the people in the New York office, obviously. So, a lot of the 35 or 38 people that went down with the tower, I knew a lot of them. They were friends of mine, and it was very sad. So, I still reflect on that, and I've been to the memorial a couple times. And if you haven't been there, I got to say, it's really touching. You've got to go to this 9/11 memorial if you're in New York. Anyway.
So giving you an update of where we're at with the market. So today is September 11th, 2025. And the Dow Jones from last week to this week, we're up a little bit. So we're actually approaching about 7% year to date as of yesterday's close, which was September 10th. But if you look at today's market, we'll see where we end up for today. But the markets are flying today. I mean, we're seeing a lot of market movement. So I expect that to be higher by the end of the day.
I think that's because they're anticipating rates being lowered. And it may be by more than 25 basis points. It may be 50 basis points.
I definitely think 25 basis points. We'll see about the 50. I don't know. We'll see between now and then what's going to happen. But I definitely know there's a high probability of the 25 basis point. And then over the last week, the Nasdaq was up about over 2%, and the S&P was up about 1.5%, and the Russell 2000 over 1% from last week. So we're seeing a little bit of in the last week, we've seen a little bit of market movement, and then not even including today, if the market closes where we expect it to close, we're seeing up over 1% today.
It's funny because the markets keep going up, and everybody keeps worrying that it's too high, it's too high, it's too high. But you've heard the saying, that the market climbs a wall of worry, and it always does. And until everyone kind of gets on board and says, I want in, usually the markets continue to go up. It may not be fast, but it continues to go up, and that's what's happening right now.
Yeah. Looks like the CPI, the Consumer Price Index, came in. It was actually at 2.9%, which is better than July's numbers, which was at 2.7. So that was obviously, I think that's part of the reason the markets are moving today. And then we are seeing for mortgage rates over the last week, we actually are seeing the mortgage rates have come down a little bit again. We're looking at the 30-year at about 6.49%. And I think there's a lot more activity right now, too. It looks like a lot more people are moving forward with some of their mortgages right now.
Well, I thought I saw the 10-year bond at 4% today. I think that's the lowest it's been in quite a while. I know that you mentioned bond rates a lot. I saw that earlier this morning, and I thought, wow, that's pretty good. If the Fed does cut rates, and I know you've got your percentages that you like to share with us. Mm-hmm. I don't know if you have that.
I do. So there's right now the odds of a 25 basis point cut is 94%.
Okay, yeah. And then I'm thinking that you're probably going to see another 2 rate cuts before the end of the year. So I think you might see 3 altogether. And I think that's good.
The 10-year bond rate is really probably the most important of all of them. The short term can be cut or raised by the Federal Reserve, but the long-term rate is really what affects most people, mortgage rates, for instance. So there's a lot of people who think that the 10-year is going to go up while the short term is going down because they're still afraid of inflation. So far, although there is some inflation, it's really been muted, and I think that's a big surprise with all the with the tariff noise that we heard, especially in April when the market dived. It's interesting to see where that 10-year is, but I think that if you're going to look at one rate, I'd say focus in on that 10-year rate.
It's the business rate. And that's the most important. And I think if the Fed does cut rates 3 times, you're going to start seeing a steepening yield curve. I think that's going to help a lot of the financial institutions going forward. It's going to help mortgage rates, like you just said. And I think, right now, I think people are looking at the Fed, and there's continued resilience to selling stocks. And if the market does go down, you're starting to see people continue to buy the dips. Wait. When you see
stocks that go up 34% in a day that are big companies, you say, "Oh, I'm excited about that. I'm going to keep mine."
I'm going to mention something about that, but I saw this really interesting article. It was in the Wall Street Journal, and it was about, we always talk about FOMO, fear of missing out, and this is where are Americans spending their money? Well, 21% they're spending their money on dining out, although restaurant stocks have not done very well over the last quarter. 18% say they're spending their money on travel, 16% on investments, so maybe we're getting through to some people out there, which is pretty good. 15% on experiences, 12% on personal development, which I'm not really sure what that is. 6% on fitness and health, that's 11%. And finally, down around 7%, luxury items.
What was the one for eating out, for dining out?
21% of Americans say they're spending their money dining out.
I wonder
As I say,
who.
you see the budgets, you do, and I
Yeah,
don't
you
think
see
people
that.
realize, and they start seeing those numbers, and they're like, "Oh, I didn't realize I was spending that much money going out."
Yeah.
Well, I wonder who they were talking to.
They didn't. It was just a general.
And I also wonder what it means by dining out. Are they dining out at McDonald's, or are they dining out at your steakhouse?
I don't know, but I mean, they're just going. They're spending money on dining outside of their home.
Right.
So maybe they're ordering DoorDash as well. I don't know. But interesting, you had mentioned something about a large company. I do want to congratulate Larry Ellison for becoming the richest man in the world. He surpassed.
He took over for you?
Yes, he did. Yeah, and that's good. If he had half my money, he would have burned his other half. But I'm like, anyway, the reason is we all know he's the founder of Oracle. Oracle had an incredible number. I'm not going to recommend Oracle to buy, sell, short, or do anything. But the reason why, and you had mentioned it went up huge, was because of an interesting reason that we've been talking about for a long time: AI databases. And Oracle and OpenAI signed a $300 billion 5-year contract to develop AI databases. But the most interesting secondary aspect of this is something we've been talking about in a lot of these podcasts. Where is the power coming from? And what they need to run these databases going forward is over 4.5 gigawatts of power, which is equivalent to over 3 Hoover dams. Think about that. Wow. That's how much electrical power they need, or some kind of power. So where's the power going to come from? Everybody starts talking nuclear again. You were talking about that in, I think I wasn't on the podcast last week. Good to be back around the table. But I think you guys were talking about nuclear.
We were desperate.
Yeah, I know. Well, I can understand that. But they were talking about nuclear and natural gas can be a way to power some of these and you mentioned coal, a lot of that as well. But I think that, we've talked about this now for a number of months, and going forward, I think you're going to start seeing more and more investors start really focusing on this power generation. So anyway, that's my 2 cents.
And just going back to Oracle for a minute, we are not recommending it at this moment to anybody based on what you're just saying, because maybe a lot of the good news is already there, so we don't know.
Yeah, like I said, I'm not saying buy, sell, or short. I'm just saying
this is more for informational purposes.
And it's more to the secondary item of power generation. And we've been talking about that for a long time. And that's what's coming up now in a lot of these earnings calls with these big mega cap tech stocks. Power. Anyway.
So, but a lot of the energy stocks are up a lot already.
Yeah,
so some of that news is already in there. But I definitely agree. We said it last week that the nuclear, especially. I don't remember talking about coal, but the nuclear energy area it's the cleanest. And to me, it's the safest. People keep talking about safety. They don't have these, or at least there haven't been these big explosions like you get with natural gas or with some other, electrical power stations. So I think that really is our future. And the way they're going about doing it is not the old big nuclear power plants. Right. It's these small little plants that are the size of maybe a garage, that can power an entire city. And the neat thing about that is that instead of having this just one central grid, that if some enemy of ours wants to shut down our economy, they could do that right now. They won't be able to do that if they have to go house to house or city to city to knock out small nuclear plants. So, and it's always been, where are you going to put the nuclear waste? There are companies right now, interestingly, who are working on using the nuclear waste. So things are happening that you don't really hear about. And it may be 5 or 10 years before all this comes about, but there's a lot of really creative stuff happening down the road. So I think nuclear is really going to be where it's at.
I think, and the last thing I'm going to say is another area that we've seen right now in AI. We've seen chips, data centers. We've seen healthcare as being big beneficiaries of some of the new AI. But I think another area, and I've heard it from a number of companies, and again, I haven't done much work on this, so I'm not recommending anything, but one of the areas that I think you're going to see is that you're going to see a lot of companies develop consumer-centric software that's going to more fully enhance the retail shopping experience for people online. So it's an area that I think where AI can really be helpful, because there are companies out there now using AI, especially in the cosmetic field, where you can go online, look at look on your computer screen, and you can see your facial enhancement, and you can see how cosmetics will look on your face before you buy them. So anyway, I think shopping experience is going to be a big outcropping of AI.
Well, I don't know how much more online shopping we could do. I think that there's an Amazon truck that just sits out of my house for about 4 hours a day.
Yeah. And then I think they come down my street. Just kidding.
I've got enough cardboard being thrown out to supply an entire city.
It was just, again, these are just little ancillary things that I hear about from these company conference calls, where I'm thinking, wow, here's where we're going to be moving as we go into the next chapter of AI.
I think there are so many things coming down the pipe, and I was just alluding to that before, that we're really not talking about, because they're probably 5 to 10 years away. But there are so many things that are going to improve our lifestyle that will be here. And I know some people don't like that because they say, well, it may cut some jobs, and it might. I don't know. But it's coming, and we'll get into that maybe in another podcast. But I'm so excited about the future.
Oh, me too. I mean, like I say, I'm just starting to scratch the surface on some of these software companies that may do this, but they're small. A lot of them are still private, so we'll see.
So you mentioned earlier we were looking at the 10-year rate and kind of where rates were there, but just giving you a perspective of where we're at on the short end of the curve right now. Our 6-month CDs and treasuries are about 3.88%. And the 1-year CD and treasuries, which they usually are lends more in favor or not, but they're about the same right now. They're about 3.7. So it's definitely coming down. Some of those rates have come down over the last few weeks. And so it's, as we're talking about a little bit of some of these rates with CDs and treasuries and cash management, over the last week, we've had a few conversations with clients and prospective clients. And one in particular, last week that we met with, we're kind of doing a comprehensive financial plan. We're both doing plans on both, but the one from last week, we're reviewing their overall financial retirement plan, getting a lot of information put together. And what we discovered was there's a lot of money in cash and treasuries. And so I think that's one of the things that we didn't realize how much they had set aside. And so we're now having this conversation, going to have conversations about what to do. And I know there's some goals with that money too as well. But it was kind of interesting within that same week, Rachel and I met with a prospective client, and they probably have maybe about a third or 35% of their money in money market right now, or cash. And we're talking, millions of dollars between a couple of clients here. So once again, when rates were up, it was people had liked those higher returns, but as rates are coming down a little bit, it's definitely you want your money working for you in the long term.
Which means that if you are a CD buyer, you want to lock in that rate for a while, because it looks like things are coming down again.
And I've always said, as the Fed pushes down rates, money gets pushed into risk assets, which are stocks, and that's why I keep saying, don't get caught up in these low-yielding CDs or money market rates. You're just gonna lose money over the course of an 18-month or 2-year period. So. Again,
though, Vince, we say this every time. It depends on why you're doing it and who you are.
I understand.
But if you're talking about long-term money, I would agree with that.
I'm just saying, be careful where because people are going to all of a sudden realize that 1% on a money market is not going to get them very far.
And looking at historically, so this is from September 2007 through June of 2025 of this year, looking at stocks versus bonds and cash. So stocks annualized about 10.3%, and we had a 10-year treasury at 2.7, and then cash at 1.3 in that time period. So once again, yes, stocks outperform, but what's the purpose of the money, and how are you positioned? And because when the markets go fluctuate, and if clients are living off this money, they want to make sure they have a plan that works for them.
But when you plan for people, you put some money into bonds or something like that.
Income
So all I'm
generating,
saying
yeah.
is don't overweight your money or say, hey, I'm going to put all my money into CDs or money markets because I'm afraid of that.
And I think that in theory you're right, but people have emotions.
Yeah.
And that's the problem. There's a lot of people come to us and say, I just don't want to lose anything. I don't understand the stock market. I don't want to lose money. So they're afraid to do it. Even though your advice is, I think, is right on, you have to just take each individual as they are. So
Okay.
I have spoken.
It's important to have a plan.
Yes.
Speaking of plans, so what's going on in your world?
Oh, I am so excited, Steve.
Oh, no.
Yes.
Oh, my God. Oh, no. We got
Yes.
more
Wait,
taxes.
I
I don't
was
want to
gonna
pay
say,
any
how
more
many taxes
taxes.
are
No.
Right.
No more
Okay.
taxes.
So the IRS has something called an online account for individuals. And if you don't have one yet, you have to get one because this is the coolest. This is the coolest. So imagine you're a tax advisor and your person comes to you, or imagine you're going to your tax person and you're like, I can't find my 1099-R. I know I took a distribution out of my retirement account, but I can't find it. Guess what? You can pull it, you can download the form itself in real time if you have an online account for individuals. This just started, so if you don't have one yet, get one. So you can pull W-2s, 1095As, 1099Rs, 1099 INT, so interest, dividends, all of the reporting documents that before you had to call your financial advisor, or when it came in the mail, you had to save it and then send it to your tax person. It's so beautifully organized. I logged in myself to my account today. I saw all my documents. I was so happy. So
Did
You don't
I
have to
hear?
have a new password or anything. So basically, you just log in now, and it's
if
there.
you have an ID.me, you have to create
okay.
an ID.me account.
Never mind. No,
but
I was thinking of something else. Never mind.
but
No.
if you've ever registered your car, you probably have one if you register your car online.
well.
But yeah. This is
look.
big. This is big news because the IRS is kind of a dinosaur, and they all of a sudden if you've gotten a notice, you can see all your notices. You can see what your payments are. People call me. They say, "What did I pay the IRS this year?" They have no idea. You can go online. You can see all your payments.
So what you're happy about is they don't have to call you a million times a day, really.
No,
right?
they actually can get their documents
Faster, probably,
and
too.
faster.
Yeah.
And the good news is that oftentimes clients will come, they won't have all their documents, we'll file their return, and then we'll get notices saying you left off a 1099, you left off a blah, and then all of a sudden you have to file an amendment, and then they owe penalties and interest. So this allows for us
What exactly is a bleh?
a blah. I don't know. Fill in the blank.
Kind of. Yeah.
You know what
it's
she
kinda like-
meant.
Yeah, I know.
There's
what
a
she
fill in the
meant.
blank.
Yeah, like a.
Who's a fill in the blank?
All right.
So
All right.
that's all I have.
Cool.
Anything going on? I'm going to talk about tariffs, but not this week. I want to show you guys the difference of how people look at it depending on your political viewpoint. So how conservatives view tariffs and how the progressives observe tariffs or look at them. And you can
This
see
is
there's
going to be
That's gonna be-
interesting.
this is
Are
good.
you going to do it right now? Are we
It's
gonna do it?
No, this is next week.
It's a good tease. That's why.
Stay tuned.
Oh, come on.
And we'll see. We'll see in the end who comes out more accurate. And that, in the end, meaning maybe 2, 3, 4 years down the road. But it is kind of interesting, depending on who you're listening to, as to how your views might be shaped. So, anyway, anything else going on that we should know about in the markets or taxes, stocks?
Yeah, we're starting to see a lot of IPOs coming to market. They're pricing
Initial public offerings.
Initial public offerings are pricing above their range, which is good because companies are feeling that we're in a pretty good market condition. The economy's okay, and I think they're also thinking with the Fed continues to cut, it does cut and continues to cut rates. It's going to be very good for the market in general. I've been saying that for a while. So IPOs are starting to. Initial public offerings are now starting to make their way back into people's life.
We have a world of acronyms.
Yes, we do.
Yes,
You
we
know?
do.
It seems like nobody speaks in full sentences or words anymore. Everything is an abbreviation.
Speaking of which, you can get your IP pin on the new IRS account.
All right. Well, before we talk about IP, it's time to go. And we'll see you next week if there's nothing else. Have a great week, and let's hope the markets stay up there. Take care.
Thank you.
Please stay tuned for important disclosures. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, Consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. WWM Financial is a registered investment advisor with the SEC.